So for more, let's bring in Alex Straton. He is retail analyst at Morgan Stanley, or she is. Alex, thank you so much for being here with us. It's so interesting, your report, because so many of us have tried to track pricing. Retailers we know aren't giving us a lot of details on what prices they're increasing, where, or how much. And so all sorts of different data sources are trying to go at this. Can you explain to us, Alex, how you came up with your 3% increase? What apparel companies were in that? And just give us some more details so we can understand a little more.
Sure. So we use a third-party data source that tracks e-commerce prices. So it's not perfect in terms of it doesn't necessarily capture brick and mortar changes. But in light of very limited data, to your point, it's wonderful to use something. Now, something to keep in mind is that this pricing data that we look at also factors in things like discounting and mix shift. And we can't exactly see how that's factoring into the pricing. But what is clear, per how you kind of introed this segment, is that from an apparel category perspective, we are seeing prices rise slightly. I wouldn't call it a huge step change versus the prior trend as it relates to 24 and pre-Liberation Day, just a little bit higher. And in our view, where you're really going to see the rubber meet the road in terms of potential price increases that retailers could take is this month onwards. So it's kind of a more to come as it relates to our read on the fact that it isn't a huge jump yet, but we should see more on the horizon soon.
And so these prices, just to sort of dig down a little bit deeper, it's not necessarily the MSRP, but it was the final selling price. So this takes into account a discount code or what shoppers actually paid, is what you're saying?
That's exactly right.
Okay.
And the reason why you're probably not going to see the prices move so much already is that we have seen a mix shift phenomenon in the space over the last number of years. You have to remember that most of these apparel retailers are sitting at gross margin highs. And I think an underappreciated component of why that's the case for an industry that actually faced declining margins for years and years and years is the fact that they're mix shifting into higher price point categories. So think going from tees and jeans into things like, workwear and tailored pants. That's a higher price point. So some of this is just an industry phenomenon, not necessarily exactly related to tariffs, in my opinion.
Got it. Yeah, because I was going to ask you that. We've seen economists mainly talk about how they don't believe that full impact of tariffs is in yet, based on what we think we know about inventory timing and receipts and when these goods were accepted and at what tariff levels they were subject to at the time. But then some of those economists say, but we could have this one-time hit later on. Do you believe that as well, that we actually have not yet seen the impact of tariff and this is inflation and prices from other factors?
I think that's broadly correct, because the way to think about it is the average apparel retailer holds 3 months of inventory on hand. If you were sitting in April, you were safe for April, May, June. If you're sitting when the additional incremental tariff headlines hit and were starting to be implemented, which was August, you were sitting on August, September, October. So what that tells me is that November onwards, and really as we just keep moving further on the timeline away from the original announcement, you're going to see the incremental and the real pricing that these guys are taking probably flow through these P&Ls. Now, it's a little bit different if you're a wholesale model, which is mostly my footwear guys. So a lot of footwear businesses are run as wholesale. So you can buy them at a Macy's or a Nordstrom, et cetera. And those businesses operate differently from a retailer in that they typically have their forward order books locked in for the 6 months out. So if you were sitting in April, you were basically locked in on whatever pricing you promised your partners for the most part, almost through the end of the year. So in footwear, maybe you see the price increases more clearly in the front half of next year. So the timing varies depending on what category you sell and what type of business model you run.
Okay, I'd love to then drill down on some names. So from this data that you're saying is a third-party e-commerce source that sort of is scanning pricing, who's raised prices the most? Who have raised prices the least?
Yeah, so I think that the best way to look at it, as opposed to just looking at October in a vacuum, is to say who's taken the most since Liberation Day in total. And a couple that stand out to me for the biggest jumps are names like Torrid and Anthropologie. Now, Anthropologie sits within the Urban Outfitters business. Does that surprise me? No, they're a mix shift beneficiary. They've been increasingly moving into higher price points as a percentage of their product. And with something like a Torrid, that was a business that did suffer from some discounting missteps over the last couple of years. So there's a bigger mosaic going on with some of these names. That doesn't just mean they're outright taking the price on this shirt from X to Y. It's a bigger assortment change that could be happening from a strategic perspective. That's apparel. On the footwear side, we're seeing more price increases versus a pre-Liberation Day level from names like Hey Dude, even Macy's, Kohl's. So that's interesting. A couple of the department stores are kind of scanning or screening as more. Or as taking higher levels of pricing, which could also be a mix shift dynamic. We know that the department stores are trying to fortify themselves with the most popular and premium brands, and they're doing active work to adjust their business model to be in a more favorable relationship with the brands.